Hello everyone, I'm Sahil and welcome back to the channel. So last month we finally crossed the 100 subscriber mark, which is kind of a milestone for me. And I thought it would be good to just take some time and thank you all for subscribing and watching my content. So in this episode, I will be giving you guys my channel update, followed by, since it's the start of the new month, I will always cover my financial update. And lastly, we'll talk about some of the interesting news that is going around in the investment world, which I personally find useful in a way. All right, and I'm kind of trying like different formats for these monthly episodes to see like which one is more appealing to you guys. So I would really appreciate like if you can just let me know through the comments below if you find something useful, like this format useful for you, and if there's anything any feedback on how I can improve. I would really appreciate it. So yeah, and I'm always checking your comments, so yeah, make sure like just hit it if you have something to say. With that said, let's get it rolling. Alright, so as we talk right now, I have 131 subscribers, which is just amazing. Like after the 100 subscribers, it is scaling up pretty fast. Every morning I wake up, I check the app, and I have +1 or +2 subscribers, which is, I think, is kind of giving me some kind of pleasure. But I feel happy about it. And yeah, all I have to do is like, I can only thank you guys for subscribing and watching my videos. I hope like you are finding something useful there, and that's why you're subscribing, which makes me happy. Anyways, like I mentioned in the introductory video, right, I had two goals starting up this channel. Firstly was just to document myself and like, be answerable to myself for the investment decisions I make and mistakes I make. And along the way, if it is useful for anybody like you guys watching it, then it's just amazing, right? Secondly, it's to make money. I wanted to make money on YouTube. It's a kind of like a side hustle, and I would never be like, I just want to be upfront with you guys. I'm here to make money through YouTube, and I believe any YouTuber who says that they're not in it for money, then they are definitely lying. Like, it takes efforts to make these videos, and it takes time. So I mean, if there's no money involved, why would you do that? However, I will make it very clear that I will only rely on the YouTube ad revenue for making any money from here. I don't know, like, push shitty products on you from sponsors or whatever. Not, I mean, I will feel lucky if like some company or someone wants to sponsor me, but I don't think I can do that. I don't want to like push shitty products on you. Even if I'm talking about certain products, it will be something that is not making me money. Maybe affiliate links for something that I personally like, but not a directly sponsored episode where I'm promoting shitty products. Yeah, but that's very far away. I'm a nobody right now, so forget about that. But I will be sharing everything with you guys, like how much money I make from the YouTube when I start making it. Like I'm already sharing with you guys my financial. So yeah, to get the YouTube ad revenue though, I must reach like minimum of 1,000 subscribers and 4,000 watch hours in the past 1 year. Currently, we are doing about 2.5 watch hours a day, which is about 900 watch hours a month. So we are pretty far away from me starting to earn money from YouTube, but I'm pretty sure like at this pace and how the snowball effect will be, right? I will be, let's say 6 months or so, I think we should reach about 1,000 subscribers if I keep on making videos. But yeah, I've been a bit busy in the past 2 months or so because of studies, but I think in the summer vacations I should be more consistent in putting out videos like once a week at least. So going forward, I will be splitting up my content into a few different segments. Firstly, it's the monthly financial updates like this one, where I would be sharing my financial situation, my net worth, and all those sort of things. And also like I will cover the interesting news in the past month which is affecting my investment decisions or whatnot. Something like what I will talk about in this episode later on. And second thing is the company analysis that I've I've been doing, like I've done for 2 videos, and I think that is something you guys like a lot, because I've gotten the most views on those videos, and it's consistently getting more and more views, which is great. I got to know that you guys like that, so I will be making more of these videos, and it will cover the companies that I'm personally investing into, and I will talk about my investment thesis and the valuations of these companies, what I think the valuation of these companies are. So yeah, these two segments will make the base of my channel, and going forward, I guess I will also make a few additional content on maybe like videos for beginners, where I will be sharing whatever I have learned in my investment journey. Yet again, I don't think I'm capable enough to be teaching anybody, so these videos just take it as like a stepping stone, something that can give you a start, like a context of the investment world, and then you can pick up some words, or some meanings to the words and what that means and all, and then deep dive into it and read more about it. The internet is free, and you can read from books or other professional YouTubers out here who are like who really know what they're talking about, and who really like have qualifications to actually guide you into it. I don't have any of that. I've just taught myself how to invest, and I'm learning from other sources as well, so just take me like a stepping stone. Yeah, that's the perfect way to put it. Also, right now the content on the channel is mostly revolving around equity investment. This is because I'm only exposed to equity investment in this phase of life. I don't pay taxes right now, so I can't talk about taxes, and I don't have any property investments as well, so simply because I can't afford it, right? But I guess as I grow up and as I go forward in this journey, I will be exposed to many more things, and as I get exposed to it, as I learn about it, and I feel comfortable talking about it, I've certain kind of like knowledge level, I will be surely making content on that as well. Look forward to it. I think of my audience as somebody of the same age group or younger, and so whatever I will be experiencing, they will be experiencing as well. So yeah, let's grow up together. All right, so now let's take a look at my equity investments and see how it has been performing in the past 1 month, which has not been a pretty one, right, for most investors in terms of capital gains, like especially the ones in the tech sector. So yeah, let's take a look at mine. I've added a column of month over month change, percentage change, so it has a clearer picture of us to what happened to the stock prices of the companies I've invested in. What I plan to do with this column is that it gives me an overview of whatever happened in the past month, which was the biggest loser, so I can look into that company and buy more, buy the dip as they say it. That's why I think this column would be quite useful, and it's not per day basis, which gives it a bit more room to wiggle around before I think about it. Yeah, I'm not here to time the market, so this is how I do it. I don't see my portfolio very often. I try not to, but sometimes you're definitely tempted to. Anyways, let's move on to the buys and sells for that month. So for the sells, I sold OCBC. I sold 200 shares at the price of $11.75. Currently, I'm left with 5 shares, and the price is at $11.77. That didn't change much since then. I have these 5 shares left because it is an old lot, and I have to like pay some extra fees to sell it. But I'm just gonna let it be there. It doesn't make a difference to me. It's just another $50 for 50. How much? $58. It's just gonna stay there. I'm just not gonna bother with it. And then the buys. So like I mentioned, right, if something drops here significantly, I'm gonna go and buy it. So I bought JD. I bought it at 325 Hong Kong dollars. I bought another 50 shares, so now in total I have 100 shares at an average price of $335 Hong Kong dollars. Then I bought Ping An as well. Ping An I bought early in the start of the month. I bought another 100 shares. So now in total I have 300 shares at a price of 110 Hong Kong dollars. So yeah, my average price right now is 126 Hong Kong dollars. Yep. And then lastly, I bought more of guess what, China Water Affairs. So yeah, now it makes like 30% of my entire portfolio. I bought like 4,000 shares more. I'm really like, I mean, every video I talk about this company, so I'm really into it. And yeah, I bought like at an average price of no, I mean, I bought this lot of 4,000 shares at the price of $6.05 around there. So my average price for CWA now is $6.13. Yeah, so yeah, that's about it for all the buys this month. And now I'm out of cash, so I can't really buy, so I'm just gonna sit around and watch. I'm not gonna rotate anyone as well, like I'm not gonna sell and buy something else instead with that money, just because I think I'm very well diversified. And even in the past 2 months, my portfolio has performed fairly well. It has not dipped below 82,000 in total value, which is just great. It's been performing pretty good in my opinion, and it should just maintain this, right? A good portfolio is the one where when there's a crash, right, it doesn't fall that much, but when there's a boom, it increases. So I've seen a good percentage increase, capital appreciation, plus on top of that dividends. But still, when the market is going down, I'm pretty fine with my portfolio. Like it hasn't dropped that much. In terms of my allocation, you guys can see it looks pretty good. I have financials and utility as my biggest holdings, and then the energy, cyclical, healthcare, defensive are split pretty well, and then technology is like the third largest at 11.6%. So yeah, I'm pretty fine with it. I think I'm diversified well within the stock market, within the equity market, and I'm just gonna hold it out and see where the market goes. There won't be much changes to it, I believe, in the next few months. I have really no cash and no income coming in as well. But I think one thing that I've learned or reiterated, right? Everybody talks about you should always have dry powder to invest in whenever there's a crash. Obviously, I'm very impatient. If I have cash, I'm gonna go buy some shares, which is what can I say about it, right? Nobody's perfect. So yeah, in January and February, start of February, everything was very rosy, right? Stocks were going up, the expectations of coronavirus fading out, and economic activities picking up was there. So I wanted to deploy as much cash as I can. Nobody foresee like what's gonna happen, but I feel now like I'm gonna make a point that I would start to accumulate about 10% of my entire holdings as cash, and also try to just buy when the price drops 10%. Every 10% it drops, I would buy more instead of like just averaging at the same price. Yeah, so these are the things that I'm going to establish from going forward. Like I said, I want to be answerable to myself. That's why I'm saying this on camera. So let's see how much I hold to my commitment. But for now, yet again, no cash. Moving on, let's talk about my net worth now. So let's see, I am at $126,688, which is great, right? Even though what happened in the last month, I'm still up 1.33%. I had to pay for my school fee as well. So even with after that, I'm still up 1.33%, which is great. Yeah, I don't know how it's gonna last, how long it's gonna last, that it will be keep on increasing with all the expenses coming up. But yeah, still great. And yeah, again, I'm out of cash now, so I'm only left with about $2,865, which again, after all the money that is locked into like minimum balances in my bank account and everything, I'm barely left with $1,000 in my account, which it's just gonna be enough for me to, like, keep it there for my expenses and my needs. And yeah, so nothing left for investments basically. I will be waiting up for money to flow in from dividends, I guess. And yeah, and oh yeah, so dividend income. So I got $101 from Nippon Carbon Holdings, which I've sold back in January, I think, or I don't know when. But yeah, it was over the ex-dividend date. So yeah, I received the dividends at the end of March, which is great. $101. Oh, this is pretty close to. Oh, it's really very close to what I got in February. But yeah. Okay, so total dividends now is $357.99, and brings our total gains so far for this year at $17,421. Awesome. Okay, that's all for the financial update. Let's move on to the news highlights. And firstly, we have the latest one. Biden is increasing the corporate tax rate from 21% to 28% to fund his new infrastructure project. And this is just inevitable, right? I have said that a lot of times, specifically in the video that I made on US. They had no choice but to increase the tax rate. So yeah, corporate tax rate are just the start. I mean, Biden himself has mentioned a lot of times during his campaigns that he's going to trim the wealth of the ultra rich and close the wealth gap in US. And then that is not going to be enough for US to survive, right? So they are going to increase the tax rate for middle income group as well, for sure. I can give it to you in written. They are going to come to that point as well, where they will increase the tax rate for the middle income group. By this time, right, the ultra rich in US will find a way to avoid taxes, and if they can't, right, they will just simply leave. I would do that if I was in their situation. Obviously, I would have to pay the one-time tax to move my wealth out, but then it's still better than living in a country that looks at you like a evil someone, like you have stolen that money from the people. Whatever. In the end, it's gonna be the middle income group that's gonna suffer from the tax hikes, not the ultra rich. They will find a way to get it along with it. And note one thing, this hike is not to fund the infrastructure project. That is, to me, is just like a hocus pocus again. It is to fund the STEMI checks that they have been so generously giving out, $1.9 trillion in stimulus checks. So yeah, looking at whatever happened in the past few months, right, the bond yield rising up so much, showing that there's not enough demand for the bonds, and if they keep on flooding the market with additional treasury bonds, right, it's just gonna make the situation worse, and it's gonna be very bad for the US economy, since it indicates that the world or the buyers of the bonds don't see US treasuries as a safe haven anymore. So if they can't raise money by selling treasuries, then they would have to simply go and the other choice they have is to tax, right, their tax money, increase the tax money. So that's what they are doing. At no point in history US has been so forward looking to see, oh, we are spending $2 trillion in this project, so let's see how we can fund it. Never. They freaking spend their money first, overspend it, always run a deficit, and then think about raising the money to fund it. So yeah, I personally simply think that they had no choice. They couldn't, like I said, right, they couldn't issue more treasury bonds, so they went on to increase the tax hike to fund the STEMI checks, not the infrastructure. So that's my 2 cents. But anyways, the question stands: what it's gonna mean for the corporates, right? The bill is not just increasing the tax rate, but it's also closing a lot of doors that the companies use to avoid taxes or to minimize their taxes. Something like parking their money in the other countries, the tax havens which are more tax friendly. So yeah, the effect of this bill is gonna be way more than the straight up 7% increase, and yeah, we'll figure that out at the end of the year, right, or whenever the tax get implemented. The second highlight I have for you guys is the Archego Sega. I hope I'm pronouncing it right. They are the one involved in the drama happening in the past 2 weeks with the block trades of 10 billion by Goldman Sachs and everything related to that. I hope you guys already know about it, but for the benefit of the ones that don't know, I'm just gonna go through it one more time. So Archegos, right, is a family office that manages personal fortune of this person over here. They have large positions in stocks like Viacom CBS, using risky and highly leveraged derivatives known as the total return swaps. Those swaps, right, allow investors to bet on stock market price moves without owning the underlying shares. Instead, the banks buy and hold the stocks and give the fund a performance-related return. The fund has to secure the trade by giving the bank collateral such as cash or equities. Archegos had assets around $10 billion, but they held position worth about $50 billion. So this dude was leveraged 5x. Now leverage is all good when there's a bull market and everything is going up, right? It only bites, and it surely bites when things starts to go south, and that's exactly what happened here. So Viacom CBS, right, they issued $3 billion worth of additional shares to fund their new project, and investors were apparently not happy with this dilution, so they started selling off their position, which resulted in a price drop of about 30%. And Archegos had somewhat of a margin call. The banks wanted more collateral to cover the increased exposure, but Archegos don't have enough liquidity, right? Obviously, they tried to call the banks and hold them off and giving them some time, hoping that the share price will recover. Credit Suisse and Nomura probably agreed, but Goldman Sachs and Morgan Stanley apparently didn't, and they started to offload their positions in order to cover what Archegos owed them. This drove the share price further down, ending the week with a 55% drop from the start. Now, Credit Suisse and Nomura are the one that are facing the losses, since Archegos can't pay them off, and they were the one holding the shares until the end. So, what is the moral of the story, kids? The moral is leverage is messed up. Don't let this ever get into your head that if you made insane gains using leverage during the bull market, that you are now an investment god. There will be an unexpected dip in the market, and that will wipe off all your gains plus your capital, initial capital, and more. Like, you will be in the negatives. I can tell this to you right now. Leverage was the reason the 07 crisis happened, and leverage is the reason behind all these things. And these are big firms. They are playing with billions of dollars. This particular family office, they had $10 billion in assets. It's personal fortune, and still they can end up in such situations. So you, as a noob who just started, entered the game, don't think of yourself as some god, investment god. And I'm saying this from personal experience. Like, it happened to me. It happened to me during Bitcoin, and I did leverage with silver. Both times I made gains and I lost them all, and it bit me in the back. So yeah, it's all personal experience, and I would share them at one point of time, and not in this video. It's gonna drag the video to be very long. So for our last highlight, we're going back to Biden. Biden is holding on to the tough line set up by Trump administration against Chinese companies. Other than delisting the companies that have ties with the Chinese government, Trump also set up a law called the Holding Foreign Companies Accountable Act. And this law was adopted by SEC recently on 24th of March. So accordingly, companies will be required to submit a document to establish that they are not linked to or controlled by any governmental entities in a foreign country. Plus, all the companies would have to comply with the US auditing standards and open their books to the US regulators. Failure to do so for 3 years in a row will result in them getting delisted from the US exchange. Now, all this is good since it will ease off some of the risks that was what happened with Lunkin Coffee from happening again. However, China's government has not let any foreign regulators to enter its key industries in the view of national security. And they are likely to keep this stance. China is actually putting up a stronger and stronger hand against US. If you saw the Alaska talk, you'll know. I'm very certain that they will not back down from their stance on not letting US regulators to audit the companies in their key industries. Hence, we can already see like US listed Chinese tech companies like JD, Alibaba. They have rushed to take a secondary listing in Hong Kong exchange. We can also see all the big funds like Singapore's Temasek Holdings moving its entire position. Like they initially were invested into Alibaba through ADS, and now they have moved the entire position to head shares. And I personally feel that it's highly likely that these companies will get delisted from the US exchange in the next 3 years. So what am I doing about it? I'm just like, if I'm buying any of these companies that are at risk of getting delisted, I'm buying them through head shares. The one I have, one and only, is JD. So as you guys see in my portfolio, it's under the head shares. Yeah, the good thing about US share is that there's no lot size, so you can even buy one shares if you want to. However, and also you get access to options trading. So yeah, if you guys like to buy sell puts or whatever to get into a position, then yeah, US was an attractive place to go for. But with the delisting risk, I think hedge shares are more safer if you are not interested in the options trading and you don't have any restrictions about the lot size. Yeah, yet again the price is still the same, like the value that you get. I think the share counts are different, but in the end the market cap in both listings would be still the same. So you buy in either of the exchanges, right? The value you get is still the same. The piece of the cake you get, the slice of the cake, is of the same size at the same price. Yeah. Right, so that's all for today's episode. I will be waiting for you guys and your comments. If you are new to this channel, please consider subscribing. And yeah, that's about it. Until the next episode, ciao.